Hello, Mish. Welcome back to another Monday after a rather interesting Friday, and then a little bit of follow through this morning. And I was reading your daily that's going to go out tonight, and I thought we should dive into this CRM chart that you talk about in the daily, get some more detail on this.
Excellent. And hi, Jeff. Yeah. Well, you hear people say this, that when the market has a sell-off, it's time to go shopping. And of course, I'm shopping. A couple of things I want to mention about that. Number one is I'm really trying to keep consistent with what I've written about in the Outlook 2025 as top picks or a theme within the vanity trade or something that I may have discussed on media, so that I'm not all over the place, number one. And number two is I'm not really into buying on a falling knife. So we're going to use the strategies that we teach at Market Gauge, and that was what the daily was about with Salesforce, to show what would trigger an entry and why. So that was kind of my thought with the daily that I wrote today as a technical lesson. So we
Yeah, and for sure, I mean the calendar range low is a great place to be looking for reversals. And so yeah, that it couldn't be more timely.
Yeah, and with Salesforce in particular, I mean, not only was it one of my top 10 picks for 2025, but there was also news today about Google and Salesforce using Salesforce AI for basically marketing, which is kind of what they're doing. I mean, they're using AI for better client-based relations and marketing. I mean, this company was the sponsor of the Olympics when it first really came into my purview. And then again, at Christmas time, it was the sponsor of the NFL game that was on Netflix. So, this is a company that's obviously got some money. And now with this sell-off, it presents a unique opportunity. So just basically using that calendar range that you just mentioned, Jeff, we know we have the 6-month calendar range high and the 6-month calendar range low. And the high might have faked you out a little bit when it broke out, especially since it was over the 50 and it corresponded. And we just did a couple of weeks of talking about how powerful that can be. But this is a clear indication that even when you have a major breakout like this, you have to pay attention to the macro. And the macro clearly has been showing some weakness with the initial breakdown of the retail sector and then the Russells and everything else. So if you're going to buy on strength in a declining, weaker market, you're going to have issues unless you get really lucky. I mean, obviously, some stocks have done very well regardless. But mostly, you have to really respect the macro and wait for the opportunity on the downside. And that's what we're talking about here. So it broke down Friday under the 6-month calendar range low. Today, it made a new low of 303.61. And I thought that was an interesting low, A, because it is a 60-day plus low, number one. And number two is if I scrunch this up, when this obviously had reported here in November, it also was the low on that day, 303.07. So that gives 303 kind of a good initial line in the sand for a shorter time frame. And for a longer time frame, it would be, gee, this really has to hold the gap. I would not want it to break into the gap territory. So that's number one. So as an initial reversal low underneath the 6-month calendar range, I love when our indicators have confluent factors to look at. So number one would be, as we know, on a reversal trade, if it's a new 60 plus day low, we want to get in over the high of the day. The next day, if it closes over the high of the day, and we'll talk about that in a minute, which would be 312.73 was the high of today. But we also have our calendar range here just slightly above that at 313.74. So to me, if we wake up tomorrow and this is lower, then forget it. That trade is done. But if we wake up tomorrow and this is coming in at 310, which is kind of where it was trading towards the end of the day, and then on a 30-minute opening range, let's say takes out that 313.75 or the 6-month calendar range, I would probably be inclined to go in at that point, just on the basis of it clearing back over the 6-month calendar range and showing that it looks like a reversal pattern. Plus, the other thing to show you on this is down here on real motion, it's holding the 200-day moving average, or it's holding support. So there are reasons to think that this stock is going to be one of the ones that turns around if the market conditions improve. And again, follow the macro because that's going to be super important. We're going to have to see the SPY holding around 600. We're going to have to see IWM holding above 215. We're going to have to see Qs holding above 520. I mean, you got to look at the indices here because they showed strain in the last couple of days.
Yeah, the other thing to consider is that this is announcing earnings at some point this weekend. This week. I don't know the exact day, right? And we've got Nvidia earnings on Wednesday. So the AI earnings train between this and Nvidia will definitely be at work. I think that supports this as long as, if the earnings come out, if it reacts positively to earnings, you've now have it sitting at a really good technical level that you've just pointed out, and a positive reaction to the earnings um, would line up well.
Absolutely. And in terms of buying ahead of the earnings, that's actually worked out pretty good for us this year because it worked out with Abby, which we'll talk about later. It worked out with IBM, was another one. There were quite a few stocks that we bought because of other technical factors, and then the earnings just, helped us out. So if you don't want to take that gamble, of course, you can wait till after earnings, or you can buy maybe sort of a starter position just to have some action in it. That's, of course, your call. So anyway, that was, that's one thing. And then one that looked even a little bit stronger than that, but the same idea is Etsy. Now, Etsy is not a stock that I've talked about very much, but I'm going to put the hyphen underneath here. But the reason why it came up is kind of from a consumer instinct standpoint. I just recently ordered a gift for a friend on Etsy, and then my friends are getting married. They ordered their stuff on Etsy. So, in this online shopping for things that are cheaper goods, almost like staples, this kind of fits a little bit into the narrative here. And I started watching the stock like a week ago and noticed, I was not going to get in right above the 6-month calendar range as the market was starting to look heavy. And then we had that gap lower. We had the new 60-day low here. Look at that. And today was really the confirmation. So technically, I could have been a buyer here today over this 52.30, as you can see, because look, it also cleared back over the 6-month calendar range. So I could have, but I did not. Why? Because if the market comes in another 400 lower tomorrow, this should be impacted, and I didn't want to take that overnight risk. However, I would say that for tomorrow, this being a little bit stronger, we're getting that reversal. 50 looks like a really good place, or just under, for a risk control. And we've got a sloping down 50-day moving average here. So I would probably think that I would rather get in closer to, say, 53 with the tighter risk than wait for the confirmation with some partial position and then add accordingly, especially if the market conditions change. But look at the leadership. It's looking like it's about to go on par with the SPY. And also, we're starting to show a little bit of a bullish divergence here in the momentum as this is nearing and just at the 50, where this is still pretty far down from the 50. And if you just kind of zoom out a little bit on this, you can see there's been a lot of support here around this $50 level.
You've also got a really nice bullish divergence in the 50 moving average versus the 200 on real motion.
Ah,
Um,
point.
Now,
Yeah.
in order for that to really be confirmed, you need the price action to be breaking out over the 50 and the 200. But that's a great looking divergence on the moving average basis if it goes higher.
Yes, and I may be sorry I didn't buy it today, but that's okay because if this stock is any good, this is a huge base that's forming between 50 and 57.50. That could have a lot of potential to the upside if it breaks out. I mean, if you're taking a look at the stock over time, it's kind of been in a big downtrend and traded much, much higher in 2023, all the way up to 80. So it's got potential.
Yeah, and for the just the daily patterns, this is the pattern you're looking for on CRM if there isn't a gap, right? A close over yesterday's, the prior day's high, a close over the calendar range low. This is what we want to see in the other ones.
Right. So now this is not as it's stronger than CRM, but not as strong as Etsy. but it's one, believe it or not, was on my 2024 outlook. And happily, I may have bought it. I don't even remember now, but it didn't do very well in 2024. But I've been reading a lot about it because it's robotics and it is something that's really going to improve fulfillment in warehousing, and Walmart already uses it. The reason why this thing has not taken off is because it's expensive to install and it takes a long time. So they're working on some cost effectiveness. But I went on Fox with Charles Payne last Monday, and I gave him a list of stocks as I always do. And he picked this one and he wanted to talk about it. And so I was waiting to see what happened with this since I've been on the show. And of course, with the declining market, I've been patient. But I said 23 was probably a really good point for this to stop. And if you look at 23, really basically you're looking like right here, right underneath the 6-month calendar range low, which it didn't even get to. So today it touched down on it and closed above. It didn't make a new 60-day low, however, because look, this low here was 23.66. Today's low was 23. Oh, actually, you know what? Today, this is not a 60-day
Well,
low.
I don't think it's 60-day if you want to
It's
be.
close. It's marginal. But it did
Yeah.
make a new, like at least since, well, the last time it was down here was like in January. So we can't really say 60-day low. But it is interesting to me that it closed here above when it already touched down. And so to me, tomorrow with today's high at 24.99, I'd probably be looking at it at 25 or higher with maybe some kind of an opening range breakout. And again, this is also in a bullish divergence. As Jeff pointed out, the 50 is above the 200 and the momentum is sitting on the 200. So it's sitting on support with a little bit of a bullish divergence. And I wouldn't sit around too long on this one. I mean, you could probably say, gee, maybe I should risk to all the way down here, 21.78. But I actually think you could probably say this last low at 23.21. So somewhere around 23, maybe 22.50, if you wanted to give a little room, would be the ultimate risk. And again, this is a stock that has a future. This is one of those things that if you are trying to get in at a good entry, you would have to probably sit for a while. It's a volatile stock. It's a little bit of a heartbreaker. But if we actually are buying near the lows, it could be a good opportunity.
Yeah, and that's what the real motion divergence with the moving averages is good for. It's not going to save it on the way down necessarily, but if it holds here and this is a spot like you just pointed out and then turns around, then it's one that could keep going.
Yeah, and look how beautiful this 6-month calendar range high worked. I mean, it never gave you two closes above to get faked out up here. So I'm really loving these calendar ranges. Are they perfect? No, but they've really been very, very good guides for not getting in at highs and maybe getting in near lows. So I wanted to end with, so remember AbbVie, Jeff and I covered this stock for a couple of weeks.
Well, what about and
Well, I
Novo?
wanted to show this first because
Okay.
get back to it. Because look how beautiful this was. When we covered it, it hit the 6-month calendar range low. And then it had a gap earnings. And this is when Jeff and I were talking about it. After it hit the low, gapped up on earnings, consolidated for a few days. This thing made, I mean, it just like basically not a new all-time high, but darn close. At one point today, this thing was trading over 205, 205.50. And this is with a market that was really crappy. So I just want you to think about this formation as we go to our next stock here, the one that I'm more interested at this point. I would not be chasing Abby right now. And that this is another one. Let's be consistent. So Symbotic was on a list and talked about, CRM on the top 10, Etsy, within the theme, but also a technical setup. And Novo Nordisk, which I've been in and out of like 3 times already, I think in the last several months, is also interesting to me because of the opposite. Now, this had a beautiful reversal pattern over the 6-month calendar range low. Look at that. I mean, it made a this was a new low, right? The low was 77.82 here. The low was 78.17. So that was a new 60+ day low. And then a gap up the next day over the 6-month calendar range. That could have been the signal, but again, I saw the market getting heavy, so I figured I'd wait. And I also had been in this stock from 80 to 89. So I felt like, let me just watch and see what happens. And then today, lo and behold, not only is it outperforming very well here as far as the SPY goes on the leadership, but we did have a move over the 50-day before we actually got it today. So now we've got that one that Jeff and I talked about for 2 weeks in a row, which is when the January calendar range high and the 50-day moving average align and you get a breakout, it's good to go. The only reason why I didn't get into this one today is because I'm looking for a confirmation, a 2-day confirmation that this thing is going to hold the 50-day moving average.
Yeah, and then you got that nice gap back up to 100.
Absolutely. If you start to fill the gap, it looks great. But, I love this stock. This is the diet drugs right here. And it's had some controversies with shortages. I mean, it's had more controversies than you can imagine. But the truth of the matter is, it feels to me like all those controversies should be over. And I read a very bullish article about the diet drugs and the trends that it is going to be impacting consumer habits to the point where consumers can be switching how they spend money based on weight loss. That could be 6% of the gross domestic product, which is amazing. And certainly
Okay.
Novo Nordisk is at the root of all of that.
All right. Well, that was a video full of ideas.
Yeah, and well, this is what I do. I mean, this is the life of a trader, right? You watch, you use our incredible tools, you make a list, and then you do, obviously consult the macro. But as you saw, Abby doesn't care about the macro right now. It's on its own fumes, and any of these stocks have that same potential.
Looks great. Thank you. And so I hope everybody starts with your daily, which is where we started all this today.
Yes, please read the daily and share it with your friends.
All right. Thanks a lot, Mish.
All right, thanks, Jeff. Bye, y'all.
Bye.